Hello, my name is Brittany Reckert, and I would like to welcome our guests to our second ever Empowering Seniors Now webinar. And we are excited to share some great information with you today. We will have 3 10 to 15 minute sessions for you today. We please ask that if you have any questions that you would please post them in the chat, and they will either be answered at the end of each session or possibly answered during the session. At the end of the last presentation, we will give away a prize to one of our guests. So please stay with us to the end if you are able to be eligible to win the prize. At this time, I will turn it over to Jacob, who will introduce our first speaker.
Hello, everyone. My name is Jacob Masters, and I'm happy to introduce to you today our first speaker, Booker Walton III. Booker T. Walton III is the owner of Mountaineer Technology Consultants, LLC. Having been a computer enthusiast since the age of 6, he's worked in the technology field for over 20 years. While the business has grown, Booker has made sure that MTC is very community-centric, working with a variety of nonprofit partners and community resources. If you were to ask him, though, he has been the seeds of Mountaineer Tech, working with seniors, giving them technical help and advice. He has built a strong network of senior citizens that he makes sure that no matter how busy the business is, that they get the important technical help that they need at an affordable price. His goal is to arm people with data to make informed decisions with their computers and technical information. Booker spends his spare time with his 2 children, Claire, age 12, and Tristan, who is 5. He resides in Morgantown and has been a lifelong Morgantown resident, committed to the improvement of the greater Morgantown community. His partnerships with nonprofits, as well as being on the board of directors of Girls on the Run, demonstrate his belief in community growth. I'm happy to introduce to you Booker Walton.
There we go. Sorry about that. I'm back. The unmute, what have you. But I thought we would start today with a fun topic. Windows versus Apple. I get this question from all sorts of people all the time. What should I get? Should I get a Windows computer? Should I get Mac OS? Should I get iOS? Should I get an iPhone? This question happens all the time. And I wanted to break some of the differences down and then give a verdict at the end where we say, okay, if it's this situation, you should get this. If it's the other situation, you should get that. So let's do a little bit more of a deep dive. Here's an overview. In 2020, 51% of older Americans bought tech products. It's more and more prevalent. I'm seeing older Americans be more and more tech savvy, and with that, they have questions. They're buying smartphones, right? Whether they buy Android or iOS, computers and tablets, and there's all sorts of different computers and tablets if you add in Chromebooks and such. We're only going to focus on the Microsoft side and the Apple side today. Smart TVs. People are buying smart TVs and all sorts of smart home devices or wearables, security devices for their homes, cameras, doorbells. There's just many different technical products that are out there. And with that, you're finding that we're having a much more engaged, older community with tech products, wanting to keep up with their kids and grandkids and things of that nature. Let's go ahead and turn the page. So here's a couple of things to consider when purchasing. Ease of use. And we're going to get into that in a little bit more detail, but can you do everything you want to do efficiently? Can I check my email? Can I get on Facebook? More and more older Americans are on Facebook. Can I talk to my grandkids? Can I talk to my kids? Does it have video capability? What apps do I have to use? Am I able, if I want to write a letter on it, or am I able to do that? What programs might I need? All those things are important. And that goes into the next part there, which is features. The different features that come on different ones. A Windows computer is going to have different features than what's going to come on an Apple, on a Mac with Mac OS, or what's going to come on an iPhone, or what's going to come on an iPad, or even if you get into a tablet that's made by Android. I mean, there are different features on each one. You have to find the ones that are most comfortable to you. And I say it right there in the third bullet point, what your kids and grandkids use. You want to be able to talk to them. You want to be able to keep up with them. Well, you should use what they're using so that you can become comfortable with it. And they're going to want to communicate back and forth with you that way. Whatever makes it easiest. And then lastly, if you joined us on the first seminar, I talked about the different scams that are out there, the computer scams, email scams, phone scams, and such. Safety and security. Is your pertinent information, is your personal information going to be safe? What do I have to do? Do I have to install software? Will the operating system just do it on its own for the most part? Those are the types of things you need to consider, because sometimes there can be hidden costs built in that you didn't even understand when you were buying the product in the first place, that I would have to do additional things with additional monies to be able to go ahead and secure my data, my information, all my critical stuff, my pictures, all of those things. So let's talk about the case for Windows. Okay, Windows is my native. That's what I use the most. It's funny, right now I'm sitting on an Apple, I'm sitting on a Mac, but I do use Windows in my day-to-day. Some of the advantages, familiarity, right? If you have grown up using Windows, it hasn't changed that much. While they've added additional features and changed the layers and the way it looks maybe just a little bit, basic Windows is still the same Windows. I get a lot of questions from people that are scared to go from Windows 7 to Windows 10. And I tell them it's not that much different. I'll be very honest with you. Sometimes if somebody gives me a computer that has Windows 7 and it's outdated and Microsoft doesn't support it anymore, I may sneak Windows 10 on the computer and then give it back to them. And honestly, they don't know the difference. They've just heard horror stories from other people who didn't want to make the change. They're like, oh, it's really not that bad. So there's a lot of familiarity with Windows. Windows obviously has been out there for a long time. Native programs. I put in there Microsoft Office, Word, Excel, Outlook for email. Those programs obviously come as part of the Microsoft Office suite. They integrate into Windows well. They try and make it really easy. They have what's called OneDrive, which is something that's a bit of a cloud storage. But what we'll talk about here when we get into the Mac OS is it doesn't quite integrate as smoothly as what you would see in there. But the other part is, of course, it's widely supported. If you need help with a Windows computer, while I would like you to come to Mountaineer Tech, there's going to be a variety of people who are going to be able to help you with that. They may not have a complete level of expertise, but they might have the ability to get you around. You might be able to call your grandson or your son or your daughter or what have you, and have them help you if you've run into a problem. All right. But the biggest case for Windows is affordability. Quite simply put, PCs, whether they be laptops or desktops, notebooks, what have you, Windows makes their computers affordable. They make them out there that anybody can get involved with an entry-level PC. And that's something that Apple just doesn't do. So you can get your hands on a computer and be able to get involved and use it right away. Honestly, for most times, you're going to, at your bare minimum, you're going to get in at about $300 and then work your way up from there. But you're at least able to get your hands on a computer. I would say this, disadvantages. And I see you put number one on there, I put ease of use. And I'll just be very honest with you. If you haven't used Windows in your career or haven't been comfortable with using Windows, it's going to be difficult to have the learning curve it takes to be able to make yourself proficient. While you certainly can use the programs, I've trained many people on these things or what have you. If you haven't used it before and don't have some sort of general knowledge beforehand, Windows can be very difficult. That's a big plus on a Mac, and we'll talk about it in a minute. And then the other disadvantage is what I was saying here in the beginning, the safety and security. Most viruses, most malware, most of those things are geared towards Windows computers. Why? Because Windows has been around for a long time and people have spent many years figuring out how to hack loopholes and things of that nature within Windows. Another point is Windows does updates every Tuesday evening. And if you haven't noticed here, the last couple Tuesdays that they put out updates, they've had huge problems. They put out an update last Tuesday, not the Tuesday that just passed, but the previous Tuesday, that caused Outlook not to show any emails within the preview or within if you double clicked on it to look at a piece of mail. We got many calls here, and I can tell you right now that my employee Andrew and I were sitting here looking for solutions. There were no solutions to be had until we looked later in the evening and saw it was a worldwide issue with an update they had put out. They have been quite haphazard with their updates and stuff. And all of a sudden you have a computer that you can't do what you want to do and you're frustrated. That's a big problem. Let's go ahead and turn the page and let's talk about the case for Mac OS, or like a MacBook Air, MacBook Pro. Mac OS is the operating system that runs on it. or iOS, which is the operating system that runs on an iPad or an iPhone. You see an iPhone picture right there. Advantages are definitely the ease of use. Anytime I have somebody saying, hey, I need to get something so that I can communicate with my kids or grandkids, send basic email, browse the internet, watch Netflix, things of that nature. One thing Apple gets really good is they make that really simple, whether it be on a MacBook computer, whether it be on an iPad, whether it be on iOS, or excuse me, on an iPhone. They make it really simple. You see there that you just have things that you can touch. It's very similar on a Mac OS. Even though it's a computer, it's a very similar sort of thing. It's a very similar feel. And that leads me to the next point. The iPad and the iPhone and a MacBook Air or MacBook Pro, they all have uniformity. All right. You're able to see the same things. You can bring things in from each of them. They make it really easy with the third thing, the third bullet point you see there, the iCloud. You're able to bring those things so you can see the same things on all of those devices. That's not something that's done nearly as easily within Windows. That takes a lot more work. Whereas you can be in the entire Apple ecosystem, right? You can have the computer, you can have the iPad, you can have the iPhone, and all three of those things, you're going to get all your information on there basically in the same way. And that's exciting to most people, the fact that they can have that homogeneous take-in of information over all of their devices. And they do that with their app store. They have an app store on their computers. They have an app store on their iPhones. They have an app store on their iPads. Fairly consistent. You might have an app that is specifically designed for the iPad and iPhone. You will have that same app, though, that will also work on the computer more often than not. It just might be contained a little bit differently for screen size and such like that. The one thing, too, that they have over Windows, and I mean, we're just going to go ahead and say it, safety and security. Most Macs are very, very hard to get malware on or to be able to break into and such. And it's because of the way that, Apple does their information. Apple does their security in such a way that it's very hard to break in. And if you look down in disadvantages, you're going to see I have it there again. I'm going to talk about that first. I've had this situation happen many times. Somebody has forgotten their password to their iPad. Somebody has forgotten their password for iCloud to get into their phone. They want to reset their phone. The way Apple does it, if you don't have it and you can't figure it out, and let's say you can't figure out the email you used or whatever to be able to reset it, that phone and that iPad, they're bricks. They're not able to be done. It's also hard to do on a computer, but there are some back wall ways, without getting too technical, that as long as you don't have encryption on it, you can still get in. But I mean, I have a couple iPads sitting here from clients that are just bricks because they came from a previous situation. They have no idea how to get into them, whether those emails exist or whatever. And that's sort of dangerous, right? What happens if something happens to us and we can't remember those things? All that information is basically just locked in on that iPad, not to be accessed by anybody. There's been several cases, honestly, where the FBI has gone after Apple and gone after, the fact of trying to get information off these devices, and Apple refuses to open those up. So it's something that they take very, very seriously, is security and safety of your data, to the point where they won't let you back in if you don't have the proper codes and authentication. The other disadvantage, of course, is cost. Cost to get in on a basic MacBook Air usually starts at about $1,000. So when you take that difference of 300 versus 1,000, that's significant. That's significant. And it only goes up from there depending on the things that you want. So let's talk about the verdict, right? It's mixed. And this is what I say. If it's a new user and you are not familiar with Windows, I personally would not feel comfortable putting you into the Windows platform, even though you're going to have to pay more of a cost. iPads are a bit more affordable. The basic iPad, I think right now starts at $399 or what have you. That easiness of getting to your information, easiness of using FaceTime or using Zoom, for example, easiness of accessing your mail, getting into different apps, being able to talk to your kids and grandkids and such over multiple platforms, right? Over the computer, over the iPad, over the iPhone. That homogeneous across devices is just huge. To where you have that consistency that you can pick up something that Apple has made in your hand, and you're going to have a pretty good idea of what's going on. I just can't say that about Windows, but I would say this. If you've used Windows in your career and you're very comfortable with it, you're already used to the platform, and you don't mind the varying technology, Windows is a good place to be, right? Because of the affordability factor, and you already have confidence using it. That's a big deal too. So it's really a mixed verdict. I take that when I talk to people, I talk to them, understand their level of knowledge as far as technology, and I help them make that decision. But you want to be informed. If you want it to be easiness of use, go with Apple. If you're comfortable with Windows, definitely move on with Windows. With that, if there's any questions, I'm happy to take them. And I appreciate your time. I hope that was fun. I thought that'd be a fun little topic for this time. So I appreciate it. Any questions? Doesn't look like there's any questions. So I'm going to go ahead and cede the floor back to Brittany, who is going to introduce the next speaker.
Thank you, Booker. We will now move on to our next speaker, Doreen Seaman. Doreen Seaman is the owner of Seaman Law Offices, PLLC, which serves both West Virginia and Pennsylvania. In her time as a practicing attorney, she has guided hundreds of families through critical estate planning decisions at varying stages of life. She is highly experienced in obtaining long-term care Medicaid benefits and veteran benefits for those in need, as well as settling estates. Doreen partners with accountants, financial advisors, insurance agents, and bankers to maximize results in each of her clients' unique situations. Doreen and her team strive to help the clients achieve their goals regardless of their means. Doreen strongly believes that knowledge is power and devoted to sharing her knowledge of estate planning and elder law in her community. She is the founder of Kadai's LLC and its Answers television series, including Elder Care Answers. Doreen is also featured monthly on WAJR's Ask the Expert series, and she authors a monthly article in the Dominion's Post Senior Post magazine. In her spare time, Doreen serves on the board of the nonprofit Pace Enterprises, whose mission is to help people with disabilities find meaningful employment. She is the proud mother of 3 adult children and 1 granddaughter. Doreen was born and raised in Pennsylvania, raised her family in West Virginia, and recently relocated to southwestern Pennsylvania to be closer to her son and his family. Without further ado, I'd like to introduce Doreen Seaman.
Thank you, Brittany. And thank you to everybody who's joining us today, and especially to Booker for taking care of all the IT magic for the webinar, and our featured speaker, Scott Werdebaugh, who will follow me. So in regard to estate planning, people often don't know where to start. It sounds overwhelming. And for those people, it's usually maybe they're indecisive, or they have family issues or financial issues that they're a little bit uncomfortable speaking about. And, you know, a lot of them just never had a lawyer, so they don't really know how to do it. But it really just starts with a conversation. And at our office, we have that conversation very often. And sometimes people are embarrassed about certain things that we need to discuss, you know, like the child that has issues with drugs, or somebody has money issues. But those are all very important things, and they shouldn't hold you back. So we suggest you look at it as more that you're choosing to be in control, that you want to be in the driver's seat to make sure that your privacy is maintained and your wishes and goals are followed through. So while it can be somewhat uncomfortable, for the most part, you know, we can make it pretty easy for everybody. So we've been looking at, over these webinars, the Estate Planning Foundation. And last month, we talked about the financial power of attorney. And this month, we're going to move on to beyond the power of attorney and talk about the will. So we're going to start in one thing that the things that we always want you to keep in mind when you think about your estate plan is that this is about control. And it's kind of the opposite of what some people think. They think, you know, if I say who's going to be in charge when I lose capacity, or when I pass away, I'm giving up control. But something will happen. If you lose capacity, if you don't decide who will help you, a judge will. And if you don't pick somebody to be in charge of your medical decisions, a doctor will, and then possibly the court will get involved. So the best way to retain control is to make these decisions yourself. So as I mentioned, today we're going to focus on your will. So think about your documents. One thing that we've really learned over the years is people really want to keep things simple. And by simple, they mean short. So people just love to show me their old will that's maybe 2 or 3 pages, and they feel like they really understand it because it says, you know, everything to my spouse and then to my kids, and boom, we're done. And that does feel really easy, but that's leaving a lot to what the default laws are going to be. It leaves a lot maybe that a court will have to decide. So what you need to think about is, do you want your will to be extremely simple to read, or do you want it to be extremely simple to carry out your wishes when and if something happens to you down the road? So why do you even need a will? You know, why can't you just say, you know, of course everybody knows everything would go to my spouse or to my children. You know, sometimes people feel like it's obvious and that they have a good family and that everybody will just do the right thing because they're good people, but that's not how it works. The law has certain rules, and we have to work within the confines of those rules to achieve your goals. So we need to appoint a personal representative, or a lot of people refer to them as an executor, and that person is in charge of taking care of all of the aspects of your estate plan that need to be taken care of. So that you normally would want to say that person doesn't need to be bonded, because you should be picking somebody you trust. And then it's going to say how and when your heirs receive their inheritance. And you might be completely comfortable with them receiving everything outright, or you might feel a little more hesitant and have some reasons why you want to control how quickly they get the money. Okay, so we'll talk about that more in a little bit. But the process that your will goes through is called probate. And probate, much to a lot of people's surprise, is not private. It's a very public matter. So what exactly is probate? Most people have heard of it, but they really don't understand what it is. So it is the legal process to transfer your assets to your beneficiaries after you pass away. And so during the probate process, your will is recorded. A list of all of the assets going through the will is recorded. A list of assets that can go to the beneficiaries without your will, for example, where there's a beneficiary designation, is also submitted to the county clerk, but it is not public record like the will and the assets that go through the will. So why wouldn't somebody want to do probate? It usually comes down to one of 3 things: the time, the cost, and the public nature. So what are those? Well, probate usually takes at least 5 to 7 months in West Virginia. It can take years. In fact, the state legislature passed a new law a couple years ago saying that if it takes more than 2 years, that the state or the county can actually take measures to try to close it down. But sometimes it does take quite some time. If your beneficiaries need the assets quickly to maintain your home or different things, that makes it a little bit complicated. And it's something that hangs over your executor or personal representative's head for quite some time. A big aversion to probate is the fact of privacy. Since the will and all the assets go through the will are recorded like your deed, okay, it's public record and you can access it online in most counties in West Virginia. And then finally, money. Your executor, if you don't have the right wording, might have to pay a bond. But also there are some court fees. And of course, if you hire an attorney like us, they're going to get paid. So a common question or a common goal of my clients is, how can we avoid probate? So one way is using a trust. Anything in a trust avoids probate. So it doesn't have to go through that process and you achieve privacy. So we'll do a future webinar on revocable living trusts and some other trusts so that you can learn more about that. You can also avoid probate by how you title assets. So you might add a spouse or child's name to your assets. Now that doesn't come without strings. So if I add my adult child's name to my assets, now they're a part owner. So it doesn't protect my asset from the nursing home, but it does expose my asset to anything that could happen to my child, such as divorce or money issues, or if they had a health issue and they were trying to get a benefit. So titling assets with a loved one's name feels easy, and it is usually, but it has a lot of complications that people don't anticipate, and they often have remorse over that. Beneficiary designations. If you have a proper beneficiary assigned to your asset, like a transfer on death, or a beneficiary in a life insurance annuity or IRA, that's a great way to avoid probate. And then there are some deed options. And so some of these things we'll go into more detail in a future webinar. Now, one of the biggest issues we see with wills are they are old. It is nothing for me to see somebody in their 80s whose child is in their 60s bring me their will that still appoints a guardian for that child because they were minors when they did it. So your documents, wills, and all the other ones should be updated from time to time. One is we want to show your intention for them to continue to be recognized. Two, there's often new wording or the laws have changed. And three, your family is going to change, your health and financial status are going to change, and the will should reflect all of those things. Now, for our younger participants, or if you're a grandparent and want to take this back to your children, you need to make sure you name a guardian for your children, and hopefully a backup guardian, an alternate for your minor children, so that the state doesn't have to try to figure out where these children should go and they end up in foster care. And then, as we said last month, in case you were to lose capacity but not pass away, that should also be in the durable power of attorney. So if you're a grandparent listening and your kid said, I want you to take care of my kids if anything happens to me, they need to have that in writing. They need to have it in that durable power of attorney, and they need to have it in their will. Now, we all want our will to be simple. We want it to be something we understand, but we do need to have backup language. What if your executor can't serve? Do you have a backup name? What if one of the spouses passes away and the surviving spouse isn't healthy? Have we prepared for that? There's an opportunity there to protect assets. What laws have changed? People don't follow those types of things. So that's something you want to check with your estate planning attorney. And then in regard to your heirs, are they financially independent? How's their marriage? Are their kids responsible? Are their kids adults? Does somebody have a drug or alcohol issue? Those are all things that need to be addressed, and we need to have the language in there. So the thing that I often am trying to impress upon my clients is, do you want your will to be simple to read, or do you want it to be simple for your executor to follow through on your goals and make sure those are achieved? Now, for the heirs that have issues, a lot of people don't realize that we have some really good solutions for that. Leaving things in trust for the benefit of your child can be accomplished through a simple will. It doesn't have to be rocket science. It doesn't have to be something that you have to have tons of money for. So we commonly have parents that their kids want them to protect their assets for them in a trust to make sure that they can be good stewards of that inheritance. And then, of course, for younger adult grandchildren or children, or for minors, we always want to be careful with how and when we give them the money. We don't want the money to end up hurting them and causing more harm than it helps. So what if you don't have a will, or you really do have a poorly drafted or very old will? Well, if your will doesn't answer all the questions that come up, then state law has defaults. So, for example, if it's silent as to who's going to inherit, or it's not clear, then the state laws of intestacy will be triggered. your goals might not be accomplished. Your estate's probably going to go through litigation, which means the attorneys are going to make probably a lot of money. And most importantly, it could tear your family apart, and those relationships might not be repaired ever. So a will is a very important document. It should be updated. And next month, we're going to talk a little bit more about what happens if your will doesn't cover everything that we need it to. And so we're going to talk about the laws of intestacy and what happens if your will doesn't properly address an issue. So, do we have any questions for me in regard to a will today? Okay. All right. So next, I'm going to introduce our next speaker. And that is Scott Werdebaugh. I've known Scott and his family for well over a decade. And he is somebody that I would trust not only with my money, but probably with my life. So Scott's a wonderful friend and professional in our community. And I'm going to give you a little bit more information about Scott. He is the founder of Integrity Financial Planning. Scott has more than 20 years of experience in the financial services industry. He's a graduate of Frostburg State University, and he currently maintains his life and health insurance license, Series 7 and 66 securities registration, and he's registered as an investment advisor representative of Securities America Advisors Incorporated. Scott has been a guest speaker at the WVU School of Business and Economics and the College of Physical Activity and Sports Sciences, Leadership Harrison, as well as several public schools in the area. As a founding member of the Mountaineer chapter of Business Networking International, known as BNI, in 2004, he has served in many leadership capacities, including as the chapter's president for multiple terms. This forum provides Scott with access to professionals in other areas of expertise, so he can assist his clients as their needs arise. Scott has coached youth sports in the area for many years, served as a committee member for Operation Welcome Home's annual gala, and is a board member of Pace Enterprises Incorporated, which is a nonprofit organization designed to help people with disabilities get great jobs. Integrity Financial is dedicated to developing lasting relationships with their clients, and they believe in helping you assess your financial goals and working with you on an ongoing basis. And now we have Scott Werdebaugh.
Thank you, Doreen. I greatly appreciate it. And thank you for everybody who's attending today. Today, we're going to talk about how to maximize your retirement income, and specifically with Social Security income. So most people tend to minimize the value of Social Security because they think it's a minimal amount and not really enough to count on. However, that's not the case, because Social Security can be far more valuable than most people realize. First, Social Security is one of the few sources of income you can't outlive. If you're worried about running out of personal assets in your old age, you don't need to worry about that with Social Security, because it continues until you die. And of course, the longer you live, the more you can extract from the system. So for example, if your benefit is $2,000 today, and you live 10 years, you're going to make just under $300,000. If you receive it for 20 years, you're going to gain a little over $600,000. And if you live 30 years, you'll actually receive over $1 million from Social Security. These figures include a 2% annual cost of living adjustment, which we don't know exactly what the COLAs will be in the future, but we think 2% is a fair estimate. So, as I said, Social Security offers an annual inflation adjustment. Unlike most pensions that somebody receives, pensions typically don't have cost of living adjustments or COLAs. Social Security does. And so if your benefit starts out at $2,000 a month, in 10 years, your check that you receive each month is going to be a little over $2,400. In 20 years, it's going to exceed or just be under $3,000. And in 30 years, that monthly check will grow to a little over $3,600. So you can see how that adds up over time. And if you've been to the grocery store recently or tried to buy lumber, you understand things can get expensive very quick, or they can gain in price very quickly. Now, when your Social Security benefit is calculated, it is based on two key factors: how much you earned over your working career, and also the age at which you apply for benefits. The formula for calculating Social Security is pretty complex, and we really don't have time to dwell on it today. But the general purpose goes like this. First, Social Security looks at your annual earnings over your lifetime, indexes them for inflation, and picks the highest 35 years of earnings to include in the formula. The index earnings are totaled and divided by 35 to come up with an average. And this is key. If someone doesn't have 35 years of earnings, the missing years are filled in with zeros, which obviously reduces the benefit. The next, a formula is applied to your average index monthly earnings, also known as AMI, to determine your primary insurance amount, which is PIA. The primary insurance amount is the amount you receive when you reach full retirement age. And you're going to hear that term full retirement age quite a bit. And each year, annual cost of livings are applied to your benefit to help you adjust with the cost of living. Now, what is full retirement age? That is when you look at your Social Security statement and that top right-hand corner, it's going to say, when you retire, your estimated Social Security benefit is this. All right. Well, if you were born before, if you were born between 1943 and 1954, full retirement age is 66. But if you're born after 1960, your full retirement age is 67. Between the years of 1955 and 1959, it'll be 66 and some odd months. Now, it's important, I'm sorry. Now, those are the full retirement age, but what if you receive these benefits early? You know, most people hear it, oh, I can take my Social Security check at 62, I'm going to do that. Well, you're going to pay a penalty for that. And for example, if somebody their full retirement age is 66, which is the left-hand column here, or actually the middle column, age 62, they're going to only get 75% of that benefit. If somebody's full retirement age is 67 and they reply at 62, they are only going to receive 70% of their benefit. And it's important because these numbers don't change. You'll never get that full, as you get up to age 67 or 66 or 67, your benefits, the only thing you're going to get is the cost of living adjustment. It will not adjust to that 100% level. And that's important. And we'll get to that here in a minute. Now, these amounts are prorated monthly, so you can apply at any time after the age of 62 and your benefit will be reduced by the appropriate amount. So this shows what happens if you take benefits early. What happens if you wait on the benefits? For every year you wait after your full retirement age to start receiving your benefits, you actually earn a delayed credit of 8% annually. On top of that, you also get the cost of living adjustment. So if we get a 2% adjustment, you're really earning 10% every year guaranteed on your benefit that you will receive. Now, those delayed credits can be gained up through age 70. But there's no real reason to delay receiving your Social Security payments after age 70 because you do not earn delayed credits after the age of 70. Now, why is it important, to wait to take Social Security? Well, one, if you're a high income earner, it makes a lot of sense because if you have it increases the survivor benefit should you pass. However, I was attending a seminar a couple weeks ago and listened to Dr. Roizen from the Cleveland Clinic. He is in charge of he's the chair of their wellness department up there. He's one of the top 10 people at the Cleveland Clinic. And I've heard him speak for the past 3 years. He is absolutely convinced that with some of the aging processes that are mechanisms that they're working on, that if somebody lives to age 2030, or to the year 2030, they have a better than 50-50 chance of living to age 100. But not only that, the quality of life will increase. He feels that somebody at age 90 will have the quality of life of a 40-year-old. Okay. Therefore, if you're going to be in retirement and you may live longer and have a better quality of life, it makes more sense if you can delay your payment for Social Security, do that, have the higher amount, and have that throughout all of your rest of your life, plus the cost of living on top of that. So those are key things to consider when you're planning for your Social Security. Now, the decision of when to apply for benefits is one of the most important and most complicated. It literally can make a difference of hundreds of thousands or thousands of dollars over your lifetime. Excuse me. It's important to realize that the decision when to apply for Social Security benefits depends on many factors unique to your situation, and you can see some of those listed on the screen. I mentioned earlier, if it's a high income earner, the best thing they would do is wait to take their Social Security benefit and apply for that at age 70. Why? Because it gives a surviving spouse a much higher benefit should they predecease them. So again, key ways to maximize Social Security payments moving forward. Now, some key points to remember is that when you apply, it requires a customized analysis. Some important things to remember is if you apply early, your benefits start out at some fraction of your primary insurance amount, as we said, sometimes as low as 70%, and it remains at that percentage for the rest of your life. The cost of living allowances also are magnified, and they magnify the impact of early or delayed retirement payments going forward. This causes the greater disparity to go on as time passes. And the when to apply question impacts survivor benefits as well. As I mentioned, higher earning spouses should wait until age 70 to take this benefit. That is my recommendation. Now, several strategies for maximizing your benefits. The first is to look at some strategies which do this. And the first one is to improve your earnings record. First, check your annual statement to make sure your earnings record is accurate. Mistakes are rare because the earnings are kept on file at Social Security where reported by the employers when they submit your Social Security taxes. But mistakes happen, and especially for self-employed people, because instead of them taking it off of the Social Security taxes that are submitted by the employers, they're taken off of tax returns. So self-employed people definitely check those estimates at Social Security or SSA.gov. The next thing is to consider how you might be able to improve your earnings record. If you don't have 35 years of earnings, can you work a few more years so that you can replace those zeros with earnings? If you have several years of low earnings earlier in your career, can you work a few more years now when you're more likely to be at your peak earnings? So those low income earning years would be replaced with higher income earning years. All those drive your benefits up. Now, some people may say, well, what if I work? What if I start taking I get Social Security, I start taking it early, but I still want to work? That's fine. However, it's important to note that if you take Social Security before reaching the full retirement age and you earn over $18,960 this year, $1 in benefits will be withheld for every $2 you earn over that amount. Let me repeat that. If you earn over $18,960 this year and you're receiving Social Security benefits prior to your full retirement age, $1 in benefits will be withheld from your Social Security check for every $2 you earn over that $18,960. Okay. Strategy number 2 for maximizing Social Security is to apply for benefits at the optimal time. We've been making the case today for delayed benefits because that will result in the highest lifetime benefit for you and your surviving spouse. But there's no one size fits all. The important thing is to apply at the time that is optimal for you. And that many times can be done by doing the Social Security audit, one of the things we offer at our office. Next is the annual earnings test. And this goes back to what we just said a minute ago about earning. If you're working and taking Social Security early, they will withhold $1 in benefits for every $2 you earn over $18,960 this year. Now, again, if you wait until full retirement age or later, that earnings test does not apply. So now it's important to know this. They don't take, if you do apply early and you do work and they reduce your benefit, you don't necessarily lose that money. What happens is they recalculate your benefit later and they apply those lost earnings to when you stop working or when you reach your full retirement age. So your benefit could increase. And instead of, let's say you started taking it at age 62, they may act and they reduce the benefit. They may say, okay, you actually would have been 63 or 64 years old had you waited to apply based on the earnings you got. So that does take place. But again, please don't let this discourage anybody from working. The more money you make, the higher your benefit is going to be for Social Security. Ideally, though, you wait till full retirement age to take your check. The third strategy for maximizing benefits is to maximize income for a survivor after one of them dies. It can be quite complicated, actually. But by understanding all the considerations and doing some calculation, it is possible for married couples to come up with the right solution for their needs. As I said, if it's a high income earner, we definitely recommend that they wait until age 70 to take that check, so the survivor benefit will be better. By the way, did you know that your Social Security benefits may be taxable? Up to 85% of your Social Security check can be taxed currently, and it's all based on income tax rate. Now, there's several ways you can minimize taxes on Social Security. You can do it by lowering your other income, especially investment income. But you should be aware that municipal bond interest, which is usually tax-free, counts as income for the purposes of calculating the tax on Social Security benefits. Ironically, Roth IRA income does not count in that calculation. So one of the ways you can minimize taxes on your Social Security benefits in the future and keep taxes down throughout retirement is to, prior to reaching the age for Social Security payments, convert traditional IRAs and 401ks to Roth IRAs. Pay that tax now for that tax-free income in retirement, and it does not count towards taxation towards your or income towards the Social Security being taxed. Another thing you can do is delay Social Security in order to reduce the number of years your benefits are going to be received, thus ideally reducing taxation, although most people do like to get that check. And continue to manage your taxes throughout retirement, not just the first few years. As always, please consult your own tax advisor about your individual tax situation. And the fifth way to maximize benefits is to coordinate Social Security with your overall retirement plan. I know some people say Social Security may not be around. It's supposed to be broke by 2035, which I love because that's actually the year I hit full retirement age of 67. But I don't see that happening. I think they will make some tweaks like they did in 1983. You're going to see Social Security for younger people get pushed out. Their full retirement ages will go from 67, I think, all the way up through age 70, maybe longer for those people under 50. That's my prognostication. But you do want to calculate this for longevity. And you want to make sure that it works well with your pension income, your IRAs, required minimum distributions that you have to take at age 70 from your retirement accounts that are not Roth IRAs or Roth 401ks, and also obviously investment portfolio and work. It's extremely important at this point because when people start applying for Social Security benefits, they're reaching a point of their life. They've gone from an accumulation phase to now a distribution phase, and it's a completely different narrative. So I'm sure many people have a lot of questions at this point because they're literally hundreds of variables that will determine your Social Security payout. We've really just touched the tip of the iceberg regarding Social Security, not to mention other retirement planning issues such as Medicare or long-term care. So Social Security is too important for guesswork. Let us help you protect your nest egg and maximize your retirement income. Because you attended today's seminar, we are offering you a complimentary, no obligation Social Security consultation in our office. The Social Security audit tool is a part of that. Simply call the number on your screen to schedule the consultation, or email me at scott@ifppro.com, which is also on the screen, and we'll be glad to assist you. This time, do we have any questions?
That was great, Scott. This is Booker, everybody. Is there any questions?
I do have one. Scott, thank you for offering a complimentary consultation to our attendees. I imagine many of them have family or friends who are not able to attend today's webinar, but can benefit from this information, your expertise. Would you be willing to offer them a complimentary consultation as well?
I'd be glad to. Just if they when they reach out to me, just state that they were on the, they were referred to by somebody who attended the webinar, and I'll be glad to schedule them. Thank you.
Did we have any other questions for Scott? All right, we'd like to thank everyone for attending. Our next seminar will be on the 16th of June, and our guest speaker will be Cindy Woodyard, Vice President of Public Affairs for West Virginia Caring here in Morgantown. But before we sign off today, we want to do our giveaway. Scott, what do you have to give away today?
I have a $25 gift certificate to the Cupcakery.
Okay, thank you, Scott. We'd like to congratulate Shanti today. If we can reach out to you after the seminar, Shanti, we will make sure you get your prize, or you can just chat your email if you would like to. And thank you so much for everyone attending today, our latest Empowering Seniors Now webinar. We look forward to doing it again, and we hope you can join us.
Thank you, Brittany. That is a wrap. Thank you to the attendees. I appreciate very much. You may go ahead and drop off, and I appreciate your guys' attendance. I'll talk to the panelists here for a few minutes here shortly. Just give me a couple seconds, guys.